What's up? What's up? What's up, my Mind Your Money business folks? It's me yet again with another video on Tuesday. Is it Tuesday morning for me? Having some coffee before work. I hope you all are doing well. And today's stock market review. Wasn't looking great out there today. It says NASDAQ leads stock declines while oil spikes on Iran attack. So just from that title, well, the article that I'm reading, it talks about the oil spike on Iran attacks. I found an article also that talks about oil. I can't even speak. Oil prices spikes and stocks tumble as Iran launches missile attack. Again, this is another event in the world that shows you how these types of things can affect the stock market. It says here, oil prices jumped and stocks tumbled on Tuesday after Iran fired more than 100 missiles at Israel in retaliation for the ground invasion of southern Lebanon. Wow. Oh, because of that event, stock prices have tumbled. Hold on, I'm looking up something. Today is Wednesday because I read an article about it being Tuesday. It's Tuesday currently on the East Coast. It's Wednesday morning here. But it said Brent crude jumped by as much as 4 PC to above $74 a barrel following a warning from the White House officials that a strike was imminent. It rose further, topping $75 a barrel after Tehran launched a volley of missiles at Israel shortly before 6 p.m. London time. Oh, yeah, I'm not going to read too much into that. So, because they launched an attack, oil prices went up. But stocks went down. Okay, U.S. stocks closed firmly lower on Tuesday after Iran fired over 100 ballistic missiles at Israel, pushing oil prices for West Texas Intermediate and Brent to their biggest increases in nearly a year. So you mean to tell me because someone launched missiles at another country, oil prices went up? Okay. The tech-heavy NASDAQ composite led the decline, shedding around 1.5%. The Dow Jones Industrial Average moved about 0.4% lower, while the benchmark S&P 500 recovered from steeper losses to finish the day roughly 0.9% after both major indexes capped last month and quarter with fresh record highs. Interesting. Meanwhile, new jobs and manufacturing data kicked off the new quarter as investors search for further clues on future of the Federal Reserve's easing cycle after Fed Chair Jerome Powell hinted the central bank is not in a rush to rapidly cut rates. Again, the Feds will be meeting in November and again in December. Will there be a rate cut? I don't know. It is what it is. It's just interesting that a country launched missiles and oil prices went up. And because of that, everything else is on the decline. This freaking game. But it's a game. Okay, job openings surprisingly increased in August, furthering the narrative that while the labor market is cooling, it's not rapidly slowing. New data showed there were 8.04 million jobs open at the end of August, an increase from the 7.71 million seen in July. Those are a lot of jobs. But you do have a lot of people in the U.S. You have hundreds of millions of people in the U.S. Yeah. And when I said the game, like I don't understand a lot of things. That's why I called it a game. So whenever I say a game, it's only because I don't understand, and because I'm not in the inner workings and in those groups that make decisions to create wars or for defending themselves. I don't know how all that works, but I do know, and now I see, like, when wars happen, people are making money. People make money from wars. It's unfortunate, but that's the world we live in. Okay, U.S. manufacturing held steady in September. The Institute for Supply Management said its manufacturing PMI was unchanged at 47.2 last month. Despite holding steady, the reading still came in weak, as a PMI below 50 indicates a contradiction in the manufacturing sector. Okay, the data sets investors up for Friday's September jobs report. So on Friday, the September's jobs report will come out. The highlight in a week full of closely watched economic data. Investors are watching for confirmation that the U.S. economy is cooling rather than crumbling. So we will see what the report says on Friday. And if there's a hint of bad news, stocks will be sold off. There will be a decline in the stock market. But the rule of thumb is when the majority of people are afraid to buy is when you need to buy. That's when you need to buy. But in good growth stock, into companies that are growing, into S&P 500, ETF index funds, mutual funds, so on and so forth. Because on average, like I've been saying, in the last couple of videos, over the last 100 years, the S&P has brought back over 10% returns. The S&P consists of the 500 largest companies in the United States that has to have at least a market cap of $15.78 billion dollars. My bad. Billion with a B. Okay, in other news, a strike by dock workers again began on the East and Gulf Coast, threatening to halt the flow of half the U.S. ocean shipping. Disruption from the large-scale stoppage could cost the economy billions of dollars a day, stoke inflation, put jobs at risk, and reverberate through U.S. politics. There's a lot going on, people. There's a lot going on, and all of these things, the war with Iran and Israel, the jobs report, the strike that's happening on the East and Gulf Coast, that's not good. It's not good. Then the elections and the campaigns that are being ran. This is a lot. This is truly a lot. Well, yeah, I guess that's it. Yeah, I was going to read some other things, but you know what? Since I have time today. Here's an article. It says rich young Americans are ditching the stormy stock market. Here are the alternative assets they're banking on instead. Let's see what this is talking about. This is on MSN. It says Warren Buffett, Elon Musk, and Jeff Bezos are among the wealthiest Americans who ever lived. The majority of their wealth is in stocks. But when it comes to investing in the stock market, today's rich young Americans are not following in their footsteps. The stock market has long been the go-to choice for people looking to invest their money, but that could be about to change as a younger generation with a preference for alternative investments outside the shaky stock market enters the scene. What are they doing, I wonder? According to a recent survey from Bank of America, individuals aged 21 to 43 with at least 3 million in assets, how did they get to 3 million? Only have 25% of their portfolio invested in stocks compared to 55% for wealthy investors aged above 43. Most rich young Americans, 93%, say they plan to allocate more of their portfolio to alternatives in the next few years. So what alternative investments are capturing the interest of these young millionaires? Let's see. Private equity investing. Private equity refers to investments in companies that are not publicly traded on a stock exchange. This asset class involves investing directly in private companies, often during their growth stages or through buyouts. It remains a popular choice among young investors seeking higher returns and more control over their investment. Is that what you're doing, young people? You know, where did you get $3 million at the age of 21 or 22 or 23? Hell, at the age of 30. Like, how many young Americans age 21 to 43 have $3 million? But it does say, according to a recent survey from Bank of America, individuals aged 21 to 43 with at least 3 million in assets only have 25% of their portfolio in stocks. I'm just, who was a part of this survey? How many people? Was it 3 people? Like someone that was 21, someone that was 35, and then someone that was, I'm just wondering what was the metrics? How did they come up with this? You know, the average person doesn't even understand investing or don't invest in the stock market. Let's go here. How many Americans invest in the stock market? Let's see what type of survey. It says, according to Gallup, 162 million Americans, or 62% of U.S. adults, own stock. That's a 1% increase from 2023 and an 8% increase from 2014. And that was posted by Motley Crue. So that is a lot of Americans. So maybe there are a lot of Americans out there that has $3 million. It says the Bank of America survey showed that over 25% of young wealthy millionaires identify private equity as one of the greatest growth opportunities. While private equity offers significant upside potential, it also requires a long-term commitment and comes with higher risk than public equities. That is true. You know, all investments are a risk. You know, you have to be willing to step outside of your comfort zone. Okay, private equity is a broad category that spans a wide range of assets. So finding a firm that can help you allocate your capital, there you go, finding someone that can help you allocate your capital to risk assessments could be a way to dip your toe into this lucrative category. Now, I would say now I'm more intrigued. Before I was a little skeptic, but I'm a little more intrigued now. I've never thought about this. But at one point in time, I've never thought about investing in the stock market, and now I am. So maybe I will look into this this private equity type investment. So it says here, with Fund Rise, you get access to an expansive portfolio of alternative investment opportunities spanning real estate, private debt, and venture capital. With over 2 million investors and managing over $7 billion in real estate assets alone, Fundrise is an accessible way to diversify your portfolio with the potential of yielding dividends every quarter. Okay. Interesting. It also talks about a golden opportunity to hedge against inflation. The Bank of America survey revealed that among wealthy young investors, 45% own gold as a physical asset, and another 45% are interested in holding it. Historically, gold has served as a hedge against inflation and market volatility. Many investors turn to safe haven assets like gold during economic and geopolitical instability to preserve their wealth. The enthusiasm of investors has indeed propelled the price of gold to record levels, with the precious metal recently surging past the $2,300 per ounce mark. Wow. There are lots of gold assets to choose from, including gold bars, coins, and gold stocks. But right now, opening a gold IRA could be particularly partial as part of your long-term strategy. I didn't know there was a gold freaking IRA. Opting for a gold IRA will help from American Hartford Gold give you the opportunity to diversify your portfolio, stabilize your finances, and secure your retirement by allowing you to invest directly in physical precious metals rather than stocks and bonds. Interesting. As one of the country's most trusted precious metals companies with an A+ rating from the Better Business Bureau, American Hartford Gold has helped thousands of clients protect their retirements. Interesting. Okay, artwork, a creative way to diversify. I've heard of this as well. More than 72% of young investors ages 21 to 43 believe it is no longer possible to achieve above average investment returns by investing solely in traditional stocks and bonds. Art is one of the alternative investments that has captured the attention of smart investors. With over $67 billion in annual transaction volume and a total estimated global value of $1.7 trillion, art represents a massive asset class. Wow, according to Deloitte, however you pronounce that name. In fact, fine art has historically outperformed the S&P 500, the contemporary art achieving an annual return of 11.5% from 1995 to 2023, compared to the S&P 500, 9.6% during the same period. Okay, so art got a return of 11%, 11.5%, and S&P 9.6%. The choice is yours. Make one, right? Okay, in the past, you had to be ultra wealthy to invest in art, considering you needed to have the millions it takes to buy a painting at an auction. But Masterworks has now changed that. This investment platform has made it possible for more investors to access this prized asset. Interesting. Instead of buying a single painting for millions of dollars, you can now invest in fractional shares of blue chip paintings by renowned artists including Pablo Picasso, Basquiat, and Banksy. Oh, wow. So all you have to do is select how many shares you want to buy, and Masterworks will take care of the rest. Interesting. Real estate, rich with opportunity. Real estate has been long considered a solid portfolio hedge, as rent and property values tend to increase with inflation. It's no surprise that high net worth individuals, regardless of their age, see opportunity in this asset. In the Bank of America survey, 31% of young people said real estate presents the greatest opportunities for growth. Federal Reserve data also show that the top 1% of Americans hold over $6 trillion in real estate assets. That's a lot of real estate. First National Realty Partners allows individual investors to access institutional quality commercial real estate investment. Never heard of First National Realty Partners, but I'm going to look into it. With FNRP, investors own a share of properties leased by national brands like Whole Foods, CVS, Kroger, and Walmart, providing a stable, positive cash flow without the worry of tenant costs and management. That is interesting. See what research does? I didn't even know this existed. With FNRP, everyday investors can become a landlord of these big name brands, accessing the potential for greater returns, diversification, and transparency. Cryptocurrency, more than a craze. Investors used to be skeptical about cryptocurrency, perhaps due to the speculative and highly volatile nature. But it has now entered the mainstream, and the global cryptocurrency market cap is currently around $2.34 trillion, according to Forbes. It's no surprise that the wealthy millennials and Gen Z are fond of this asset class. In the Bank of America survey, 29% of younger people said cryptos offer the greatest opportunities for growth, while only 7% of the older group agreed. Rich young Americans also allocated 15% of their portfolio to crypto, compared to 2% of the older generation. If you're interested in getting in the crypto game, check out Coinbase. I've heard of Coinbase, the first crypto company to go public and largest cryptocurrency exchange in the United States. Coinbase is a secure online platform for buying, selling, transferring, and storing cryptocurrency such as Bitcoin, Ethereum, Litecoin, and other digital currencies. With over $269 billion in safeguarded assets and more than 245,000 ecosystem partners in 100 countries, Coinbase is considered one of the most user-friendly and reputable exchanges in the digital currency space. Wow. And that's it. So young people are doing crypto, real estate, they're investing in artwork, and gold. Oh, and private equity. That was a good read. That was interesting. That was really interesting. I'm going to look into, I like the real estate part. I'm going to look into that. So I have to send this article to myself so I can look at it again later, because I have to get out of here and go to work. All right, so you guys take care. I hope you have a blessed day. Invest, people. Stop sitting on the sidelines. I'm making money. Yes, the stock market is down today, but it won't be down forever. Today is just, it's another day, but it's not the end of the world, So yeah, so you guys take care. Peace.